If you are an investor, you have likely been paying attention to some worrying market news over the past several days. You can see in this graph that's showing Vanguard Total World Stock Market Index Fund, VT, that's based in the US. You can see that over the past few days, we've had a massive drop. Year to date, we're down about 12% from the high that we had in December. And that is concerning. Like, it's real money if you're living on that money, if you're a retiree. If you're an investor that's continuing to invest, this is a good buying opportunity. But it is scary. It's scary to see your portfolio drop, particularly if you've just started investing and you don't have a lot of gains to rely back on. But if we back up a year, that 12% drop is actually only about a 6% drop since a year ago, because we had a big growth at the end of 2024. And now we've just dropped down back to a little bit lower than where we were in the early parts of 2024. But if you look at a 5-year timeline, if you started investing 5 years ago, you are at a 54% gain. Over 5 years, that comes out to about 10% per year, which is what we expect the market to do. Remember, it's the market average. In a given year, we almost never get a 10% return. Sometimes we get a positive return, sometimes we get a negative return, but it averages out to about 10% per year. And we're right on track for that currently. If I zoom out to the max available for this ETF, this is the one that I invest in as an American, you can see that the volatility is really normal. You see these booms and busts. This is the cycle of the stock market, up and down, up and down. This dip here is 2020. This dip here, this is the recent sort of inflation-driven retraction in the market for 2022, 2023. Back here, this is the great financial crisis of 2008, when there was the mortgage housing crisis in the US that drove the entire economy to retract a bit. But it's normal, and we always have recovered. There has never been a time period in history where the stock market has not recovered. If you want to see longer term data, I've pulled up the S&P 500 here as well. And you can see this graph goes back much further, and you can see, sorry, my picture is covering it. You can see 2008 here, and you can also see the dot-com bust here. I don't have an easy graph to pull up that goes back farther than that, but we're going back to the 1990s here. So this gives you an idea. This is all normal and expected. There's nothing to worry about with your portfolio. If you are globally diversified, you're buy and hold, and you have an asset allocation that suits your risk tolerance, just continue as you are. However, that does not mean there aren't things to be concerned about now. It's just not your portfolio you should be concerned about. It is actually the political situation and the policies of the Trump administration right now, which are worrying. Stock market noise is expected. Nothing out of the ordinary here. Stay the course.